When you get a low interest mortgage, you save lots of money. Lots and lots of money. So let's talk today about mortgages and interest rates and how you can find the lowest interest mortgage. Hello everyone, I am Ajinkya Patil and welcome to my channel. Today I am going to give you 6 tips to get the lowest interest mortgage. If you like this video, then hit that like button and subscribe to my channel. And also check out some of my other videos about buying a house in the Netherlands. Let's first understand how you can save a lot of money by simply choosing a low interest mortgage. If you buy a house that is worth 325,000 euros, you can get mortgages from 0.75% interest rate all the way up to 1.77%. In terms of mortgage payments, that means a difference of 276 euros per month. That is the money you could have saved by simply choosing a low interest mortgage. Over a year, that is 3,300 euros, and over a long term, of course, that is tens of thousands of euros. Now that we know that we can save tens of thousands of euros, let me give you 6 tips to know exactly how you can get a low interest rate mortgage. Note that these are generic tips, and I would encourage you to consider your own situation and consult with your mortgage advisor. Without further ado, let's get started. Tip number 0. Compare well. Yes, you heard it right. Today I am starting with number 0. That's because this is the most important tip, that you should compare among all the possible mortgage lenders that are available in the market. I have seen many people who simply go to the bank where they already have an account, or they might go to a big bank that is well known. Actually, you should know there are many more lenders in the market, and these big banks may not always offer the best interest rates. Some of the names that are not known to you are actually subsidiaries of these big banks, while they offer much lower interest rates. So my suggestion is to compare well among all possible lenders in the market. How can you compare the different lenders in the markets and their interest rates? One way is you can go to an independent mortgage advisor. This person will act as a middleman between you and different lenders in the market, and that way you can compare all the lenders against each other. There is another way. You can also get this information online by yourself. Let me show you how. One place where you can compare different mortgage lenders and their interest rates is the website of Consumenten Bond. Consumenten Bond is an organization that promotes consumer protection. I will leave this link below in the description. On the left side of this page, you can add details about a potential mortgage you are interested in, for example, market value of the house, how much you want to lend, energy label, and so on. On the right side, you will see different lenders with their interest rates, and you will see for any given situation, there is a variety of lenders offering a range of interest rates. Another place where you can compare mortgage lenders and their interest rates is Independer. I will also leave this link below in the description. On the left side, you add details of the potential mortgage you want to get, and on the right side, you find different lenders. For example, in this case, there are 40 lenders that are found, and their interest rates are listed. Now that you know that we should compare different lenders in the market and how to find their interest rates, let's get to some actual tips to get a low interest mortgage rate. Tip number 1, NHG, or translated to English, National Mortgage Guarantee. The NHG is a guarantee towards the mortgage lender by a government backed fund. If you have a mortgage that is backed by NHG and somehow for some unfortunate reason you lose your job or lose your partner and can't pay your mortgage back, in that case the mortgage lender can turn towards NHG for support. And that extra security means lower risk for the mortgage lender. And for that reason, they often give you a big discount if you have a NHG backed mortgage, sometimes as big as 0.5%. For our example house of 325,000 euros, we could save 0.5% in interest, or about 1600 euros in the first year, just simply by getting a NHG backed mortgage. You can apply for NHG if you buy a house that is worth up to 325,000 euros in 2021. And that limit you can increase by about 6% if you do some changes to the house to save energy. However, a whole detailed look on energy deserves a separate video on its own, and I think I'll try to make such a video sometime in the future. Second tip to get a low interest rate mortgage is to buy a house with good energy rating. Many banks offer a sustainability discount. It's a discount on the interest rate if you buy a house with good energy rating. Now, each bank defines its own criteria as to what qualifies for this discount, but you can simply go to the page of Konsumenten Bond, add the energy rating of the house, and you'll see the corresponding interest rates. For example, ABN AMRO offers 0.15% discount in its interest rates if you buy a house with energy rating of A. Third tip to reduce the interest rate on your mortgage is to do a down payment. If you pay part of the purchase price of house from your savings, many lenders will offer you a discount on their interest rates. That is simply because it does mean a reduced risk for them. Tip 4 is to choose the right length of time period to fix your interest rate for. Generally speaking, if you fix your interest rate for a longer term, then the interest rate goes up. That's because the lender takes the risk that in the future the interest rates might go up in the market and they could make more money instead of fixing it for you for a longer term. So generally speaking, if you choose to fix your interest rate for a shorter term, you get a lower interest rate. Keep in mind, by doing that, you do get a lower interest rate. However, you run the risk when that term ends, you might have to pay a higher interest rate if the interest rate rise in the market. Combining tips 3 and 4, you will often see a table like this that a lender offers. On one side, you will see the time period for which you can choose to fix your interest rates for. On the other side, you see the percentage of the market value that you are taking as a loan. Or in other words, how much are you paying in down payment versus how much are you borrowing. By varying these two parameters, you can choose the interest rate that you wish to have. The next tip is to look for package deals. At the beginning of the video, I mentioned that some of the big banks do not always offer the lowest interest mortgages. However, they often have package deals. For example, at ABN AMRO, if you have an account and also mortgage at the same bank, you get a discount of 0.2% interest on your mortgage. So my suggestion is to go and look for package deals. The last tip is to look for budget mortgages. The same lender might offer different products when it comes to mortgages. Some of them might be budget, meaning that they offer lower interest rates. When it comes to a budget mortgage, you do want to be careful about all the other conditions in that mortgage. Sometimes those conditions can be unfavorable compared to the other products from the same lender that are offered at a higher interest rate. But keep your own situation in mind, and maybe for your situation, all those conditions are just fine. I hope you found these tips useful to get a low interest rate mortgage. So hit that like button and subscribe to my channel, because in the next video, I am going to talk about what are the other factors that you need to consider when you choose a mortgage. In the meantime, check out my other videos. How to determine market value of a house, or should you buy a house now or wait?